Today is not my friend, guys, so hopefully you can all hear me now. Just put a little comment in the chat box so I know that you can hear me. Great. Wonderful. All right. Well, everyone, welcome to our investor education webinar. And I'm really excited because today we've had over 100 people register to watch. And it's really, really great. I find when we have these sessions with all the state-by-state property managers in one room so that you can really work out those comparisons if you are someone that is looking in different areas. So I'm very excited to have all our favourite property managers here today with a couple of bonuses for you. So we've got Kelly from Hunter Valley in New South Wales, and we've also got Katrina from Geraldton in WA, and we have been receiving a little bit of interest with regional investing, and I don't know a lot about regional investing, so I'm really excited to sort of hear about that as well. And I will, as I need to each time, just put a little disclaimer on here just let me just make sure it comes up, just to remind you that the information is for general educational purposes, but I can assure you, you are speaking to and hearing from experienced licensed real estate agents today. So I have got my special guest that we're going to be bringing on as well, who is Diana McKenzie. And Diana McKenzie is a finance expert. And I have chosen this photo of Diana because I love it. And it was from a retreat in Bali. But she's not going to be happy. And I'm sure she's going to say something to me afterwards for not using her regular headshot. But I love this photo, and Diana from Loneport is going to talk about a couple of things that I think you're going to really be interested to hear about from the finance side of things and those trends as well. And to also let you in on a little secret, Diana is my older sister. So if you see any resemblance, that is why. So we actually share an office here in Perth with her team and our team as well. So I'm looking forward to hearing Di's session so we can find out what the trends in the finance space is and in the lending space as well. So we are kicking off today with Tara Bradbury. So let me bring her to the stage and hear what is happening in Hervey Bay.
I'm hoping I'm not muted now, so I'll just repeat that. My name is Tara Bradbury. I'm the principal leasing agent at Active Agents in Hervey Bay. I specialise in property management within my area, so I've got quite a bit of feedback for those that are investors online watching today as well. In Hervey Bay, we have a lot of exciting things happening. And I know in some of the previous webinars that we've done over the last 12 months, I've talked about the train building happening out at Torbanlea. We have our new, what I would call super centre, which has Anaconda, Early Settler, the Good Guys and Planet Gym and all those other bigger gyms opening up kind of in the centre of the Hervey Bay region at the moment. And we've also have our new council chambers, which will also include the library, 20 plus story building, which is coming together down towards the end of Main Street. And it's for us in Hervey Bay, we've never really had a central location of a CBD hub as such. And by this project kicking off, which should be completed anywhere between 2025 and 2026, our market is very much full of different trades coming to the area to assist with a lot of these projects and builds. So it's exciting to see that even past COVID now, we've got some lots of big projects that are happening and coming together, which is great. And from what I'm seeing, from my perspective within our rent roll, we do have a lot of companies that we're renting to that are wanting to house their supervisors, house their trade staff, and a mixture of, there are some that are looking for furnished properties, which is handy when they come up. They do tend to go really quickly, but also houses up to 4-bedroom homes and that as well. The average rental return for a property which is a 4-bedroom, 2-bathroom and double lock-up car accommodation home, if you were looking at it 2 years ago, those rental returns would have been anywhere from $400 to $450 per week. We're now seeing that 12 months ago, $500 to $550, and in the last 6 months, that's kind of gravitated from $550 even to as high as $600 per week, depending on what the extras are there that are included with it. If you are an investor that has a shed, extremely handy. Everyone loves a shed here in Hervey Bay. Certainly tenants, they love to have that for storage, whether that be to store your boat or jet ski or an extra car or other items. It's a popular point, and whenever we have houses with sheds come up, they go quickly and they do tend to have a slightly different price point. So the standard 4-bedroom, 2-bathroom, double lock-up car accommodation home, let's say for $550, without any extras, if you put a shed on that, you're pushing up into the $600 price range. And that could be then again $600 up to $625, $650, depending on the age of the home. So still a very buoyant market. We, as of today, have 82 properties on realestate.com. We have gone over that. We've gone up to anywhere from 120 to 130 properties available, but we have still found that our properties are still renting within that 3 to 7 day range. If you are an investor that's trying for that much higher price point and pushing and testing the market that you could do 2 years ago, that market really isn't there now. There's a little bit more variety to choose from, so tenants won't just go and pay. But I think that, you know, making sure that you're priced right, talking to your agent, and there's a lot of us on here today, about where the market is sitting, that's going to get you the best return and the best longevity with the, your tenant that's in place there. Hervey Bay has always kind of been probably known as a very settled area, more so where it hasn't been as transient. But right now I'd say that shift's a bit different, and we do find that we have quite a few leases that are only just for the 12 months or the 18 months, and sometimes even as short as 6-month leases. So some of our investors appreciate and enjoy that because it means that they're getting a bond clean done in between each time, and others prefer that longevity. So it's hard to gauge. It'd be nice if we had a crystal ball and always knew the tenant's exact intentions, but we give as much information as we can. In the sales market, it's still fairly buoyant as well. If you have a particular style of property that is unique, we are finding that they are going very quickly. There was in our business, we've only just started in sales and have been doing that for the last 12 months. We had a property that was a 10-acre property that was listed for $900,000, and it went within 24 hours and had a contract on it, cash contract, and we had other buyers ready to go, but there wasn't another property similar to that, and we haven't seen another property similar to that coming up. So specialty properties are getting snapped up really quickly. Those that are your standard homes, a little bit more variety. We're not seeing an adjustment in pricing, but it's still very exciting for the area. So I'll hand you back to Ashley now.
Hi everyone, I'm Tamika Smith from Q2 Property in Northern Tasmania. I'm the director of this business, the property management side, and I've been doing it now for just over 2 decades. We cover a pretty big patch of the Northern Tasmania pod of rentals, which is fantastic, and we've got 2 offices located across the north, so we cover a pretty big area. We're about to come into our peak leasing season, so summer here in Tasmania is the peak time to be either buying an investment or for tenants moving. Not that many tenants want to be moving in winter in Tassie because it's cold, not that desirable, and a lot of the employment opportunities in Tasmania are stacked around the summer period. So we are just gearing up, ready to get into a really good leasing investing period. So what we're seeing in our local market at the moment is a really steady vacancy rate of just on 1% right across the board, which is great. This time last year, we saw it at about 0.5%, but over winter, it blew out a little bit to around 2%, and we're now back to about 1%, which is fantastic. Days on market here on average is sort of around 10 to 13, which is great. That's enough time for a change of tenancy and then to get a new one in, and not really much loss of income for our landlords, which is fantastic. Rents are super steady and reliable at the moment. Winter, we saw a slight drop, but they're picking back up. Average rent for a good 3-bedroom home is about $550 a week, and our 2-bedroom units are really achieving well at around $400 a week. So that kind of standalone unit is really appealing to both investors and also to tenants because it is affordable housing. So they're really appealing. Lease renewals across the board are renewing at about a 90% rate, which is fantastic. And we're seeing averages of $20 a week increases. So rents are still increasing, even though we saw big increases over the last 2 years. We are still seeing really steady increases for investors, which is good, particularly those that bought in the last 2 years with the increase in costs. So, the rents are sort of stacking up still really quite well. The sales market's doing really well here. Again, a little bit quiet over winter, but it's certainly picked back up. We're seeing a lot of investors start to come back into the market, and we're seeing now average return on investments around 5 to 6%, which is great. Most areas were down around 2% over the last couple of years, but we are now seeing really good, solid return on investment. So it's making, particularly Northern Tasmania, a more viable option to invest in, and certainly a more appealing option to invest in. At the moment, I'd be working with around 21 investors that are looking to buy across Northern Tasmania, which is fantastic. Some really hot areas to consider if you're an investor and you're looking to buy or grow your portfolio or start is Kings Meadows. So one of the suburbs. Kings Meadows is fantastic. I still think it's got a lot of capital growth to go. The homes are really solid, well built. And at the moment, we've got an average return on investment of 6.5%, which is fantastic. Days on market in Kings Meadows at the moment for us is about 5. So it's a really appealing area. It's up and coming for families and professionals. It's a 5-minute commute into the city, but has a really good community feel. So that's certainly a really popular one. The other area that I think has got a lot of potential at the moment is Devonport. So it's about an hour out of Launceston CBD, but that's the next biggest regional city in the north, and that's showing an average return of 6%, which is fantastic. It's by the water. It's got the new hotel, the new development down there. So Devonport is definitely on the up and coming, and we're finding a lot of families are wanting to move to that area to rent. So showing really, really good, solid returns, which is fantastic. So the north of the state's going really well. I know Nat will fill you in on the south of the state, but Tasmania is, again, a really good place to be looking to invest for long-term capital growth and really good, solid sort of 5 to 6% returns at the moment. So that's it from Northern Tassie. I will hand over to Diane to talk about finance.
Good morning, guys. You've got Jason right here from Essential Property Management, and I'm in South Australia with the CBD behind me. The market here is still going crazy for rentals, to be honest. We've still got a less than 1%, so about 0.8 to 0.9% vacancy rate. The other thing I'm starting to see is an above average number of owners are starting to sell their properties. We've had about 100 owners sell their properties in the last 12 months. It's a combination of things. The significant part is huge capital growth in South Australia, so they're cashing in on that. Second to that, obviously, is interest rates. The average owners interest bill has increased by about $170 a week. Whilst we're still seeing average rental increases somewhere between $60 and $100, it's still not making them cash flow neutral, so it's starting to become a bad investment. We're still seeing huge application numbers in the sub 500. So all of our properties less than 500, we're still getting 80 to 100 applications per property. We are starting to see a decline in the quality of those applications. Add to that our council rates have increased by about 17% in the last year, and owners are doing it a little bit tougher here than they were a year ago. All in all though, this is still a fantastic place to invest, and I'm seeing heaps of interstate owners still want to invest in Adelaide. It's still really decent yield, even at higher than average purchase prices. I would definitely continue to invest in Adelaide if you're keen to have a chat.
Hi everyone, I'm Di Mackenzie from Loneport here in Perth. I'm a mortgage broker, and today I wanted to share with you some of my tips for looking at finance when you're buying a property investment, both for any new property investors and for those that are current property investors. So the first thing that I would recommend is that you get pre-approval. It gives you more confidence, the real estate agents more confidence, and your sellers more confidence if you have pre-approval and you know how much you can borrow. The other good thing when you do get pre-approval is the lenders generally fully assess your application and all of your information. So if there is going to be anything outstanding or any other things that you might need to tidy up, the pre-approval will give you some conditions for your finance, and you'll know what you need to tidy up. So it will just help the finance process go a lot more smoothly once you've found a property to purchase. The other thing that we are seeing in Perth is that people are starting to move back into the cities and look at high density apartments. And high density is where generally there is more than 5 stories in a building or more than 50 apartments in a building. And one of the things that you need to really know about high density is that the lenders often won't lend you as much money. So when we talk about loan value ratio, which is the loan amount compared to the property value, typically the lenders are looking at 65 to 70% lend on those properties rather than going up to 80 to 90%. So if you are going to buy high density, it's really good to check with your lender what their high density policy is. The other thing, the final thing that I want to share with you today, which I think is really important when you're buying and financing a property investment, is whether to make your repayments interest only or principal and interest. I've found over the years, and I've been a broker for 19 years, that a lot of accountants and financial advisors will tell you to pay interest only. However, over the last 10 years, I've been recommending to my clients that they make principal and interest repayments on their property investment loans. And there's a number of reasons for this. One of the big reasons is there's 2 ways of gaining equity in property. The first one is capital growth, which we're all chasing, but the other one is building equity up in your loan. So by doing that, principal and interest repayments help you to build up equity in your property right from the beginning. The other thing that happens with interest-only repayments is once you get to the end of your 5 or 10-year loan term, interest-only term, the repayments then are calculated over the remaining loan term, which might be 20 or 25 years. And if your financial position has changed in that time, you might find it really hard to refinance. So all of a sudden, you're going to go from an interest-only repayment up to a principal and interest repayment that is then based on a 20-year or 25-year loan term. So it will really hike up your repayments, and it could really put you in a vulnerable position if you're not in a good position to refinance. And the other thing that with interest-only repayments compared to principal and interest repayments is your borrowing capacity is lower with interest only. So if you are looking to borrow more money, it's better and it gives you a higher level of borrowing capacity if you are making principal and interest repayments. So I hope that's given you some insight into finance for investment properties, and I'll hand you back over to Ash.
I feel like I need to do a little bit of music and dancing in between while Sam works out her camera. So I'll give her a few minutes while she comes on. And while I'm here, I wasn't going to mention it, but I will because we're waiting for Sam. Big congratulations to her. She won REWA BDM of the Year last week, which was super, super exciting. And she's been doing a really, really good job with the Perth investors and the Perth buyers agents over here. So Sam, when you have your camera working, jump on. But what I will do is I just want to also give you a little bit of feedback of what's happening. I've been finding happening in the Perth that we're still getting quite a few buyers agents entering the market, which is quite surprisingly because I thought that we've sort of exhausted all our buyers agents, and this week we've had 3 more come into Perth, which is really interesting. So it's going to even tighten up our sales and rental market even more. So it'll be still very, very interesting time ahead. But Sam, let us know what's been going on with the north and south of Perth from your end.
Great, thanks Ash. Yeah, that was my technical issue at my end, so apologies for that. Okay, so a quick overview with what's been going on. So I'll start with the Southern Corridor, so predominantly your Rockingham, Port Kennedy, Mandurah locations. Now, in this particular part of town, I have actually seen the home opens and the numbers drop a little bit, and that's because there's quite a big supply down there at the moment. The rental prices themselves in that area are still really strong and probably the strongest we've seen. So you're averaging about 550 to 600 per week for a nice 4x2 in that particular area, which has been really good. The lease renewals for the southern part of town have also been fantastic. Like almost every tenant is signing on for a 12-month lease renewal, and pretty much all of them are with rent increases. And the rent increases are gauging differently between sort of that $20 to $50 mark, depending on where they're at. So that's been really positive. I've got a really good case study for a property down there, for a suburb down there actually, which is Port Kennedy. Now this suburb is not something that was on my radar at the start of the year when I went through and did my little bit of a list of suburbs to watch. But in this particular case, we had a client purchase a property which is just a really big, massive 4x2, corner block, triple garage with a pool, like all of the things, opposite a park, like fantastic spot. for $550,000. Now, the downside to this property is it needed a lot of work. So we spent roughly about $30,000 on renovations and took us about 2 to 2.5 months to do that. Once the property was ready, we leased that for $750 per week. Now, moving forward past this tenancy, this property is in immaculate condition now, almost brand new, and it ticks all the boxes for every tenant moving forward. It's just going to be a property that's constantly going to be in high demand. So I really liked that opportunity for that particular client. It was a really good success. So that was really great for that particular area. In the northern part of town, I've seen a lot of interest in a suburb called Alexander Heights and also in Clarkson. Now, these two areas are well-established areas. They've got fantastic infrastructure. They've got all the things that families and professionals want, good access to the CBD. So properties in there are in high demand. The rents are fantastic. You're looking at sort of $600 to $650 plus, depending on the size of the house. So that's been really, really popular. Again, the home open numbers have been super strong in that part of town, and also the lease renewals as well, which has been fantastic. Then we've got our little eastern sort of pocket, which is, you sort of Kelmscott, Seville Grove, Armadales. This Thornley, these little areas have slowly just been ticking away. And a few months ago, there were quite a bit of demand in there, and it's really starting to pick back up as well. And you can pick up some fantastic properties in that area, and the rental yields are in your sixes for most of the time. Some of them do need a little bit of work. They are tired, but still a fantastic little pocket to buy in. And so, I think the northern suburbs and that eastern part of town are just doing really, really well. Overall, Perth has an extremely low vacancy rate, so it's just been really great to see. So if you need anything else, just pop your questions in the chat. I will be here. Otherwise, I will hand back to Ash.
Thanks, Sam. So I'm really excited to hear from Katrina next. So I'll just bring her on. So Katrina is the growth manager over in Geraldton. So Geraldton is north, but it's really, really north. So I'm going to let her tell you whereabouts it's positioned. So typically in Perth, we've got the metro areas sort of, which goes from about Yanchep, which is sort of north, down to like Mandurah. And so then anything outside of that is considered more regional. And we have got a lot of inquiries coming through from Bunbury at the moment, which is regional south. But unfortunately, the lady down there couldn't share, but she'll be on next time to be able to help for anyone that's got inquiries about Bunbury. But Katrina, before you start, would you also mind just filling everybody in with like how far Geraldton is away from Perth as well, just so they know, and then continue with your presentation?
Yeah, so we're about 400 kilometres from Perth. So it's a good 4.5 to 5 hour drive to Perth. So we are quite a bit away. So yeah, I'm Katrina Jones, Growth Manager at Professionals Geraldton in Western Australia. The demand for property in the Geraldton area is high. Our vacancy rate is around 0.6% and has consistently been below 1% over the last 12 months. We're seeing high levels of inquiry from people moving to Geraldton for work, particularly those in service industries such as doctors, nurses, teachers, along with a variety of different private companies looking to house employees in industries such as infrastructure, mining and resources. There are numerous projects happening in the Midwest region, which is really driving the demand for property. We have our port expansion taking place. We are the base for resource and mining companies who have projects in smaller localities throughout the Midwest region. Geraldton is blessed with a diverse economy though, including farming, fishing and tourism. With our natural resources of wind and solar, the Midwest is also expected to become a hub for hydrogen and green energy projects into the future.
with the announcement of the rare earths refinery being constructed in Eneabba, which is 130 kilometres from Geraldton, we expect the growth in our region to continue. The quality of tenants in our area has increased over the last 3 years. We are able to secure 2-income families, even for the lower end of the market. Due to the demand for properties, tenants really value having a roof over their head, so caring for the home to a much higher standard across the board. We have seen lease renewal prices increase anywhere from 20 to 30% in the last 12 months. Our tenants are very aware of the property prices in Geraldton and the lack of availability. So we have a very high renewal rate, which is great for property owners in reducing costs of tenancy turnover. We are leasing most of our available properties after the first inspection and are able to secure a tenant within 3 to 7 days of coming to market. The most sought after properties are in the suburbs of Wandina, Black Point, Beresford, Mount Tarcoola and Tarcoola Beach. In saying that, because everything in Geraldton is in close proximity, it's not necessarily about the location, but what the property has to offer. So 3 to 4 bedrooms, 2 bathrooms are the most in demand. And properties with these features in these locations are achieving anywhere from $500 to $600 per week. As of today, there are only 38 properties available for lease, and we are seeing an average of 30 to 40 people at home opens, with 10 to 15 applications being submitted after the first inspection. So a lot of demand here in Geraldton. Thanks for the opportunity to speak with you today.
I always find it really interesting to hear sort of what's going on and comparing it, against the Perth market. So it's really interesting to see that Geraldton's actually performing very similar to our numbers that we've got down here, yet there might be opportunity for more affordable purchasing. So I'll get Katrina, if you can, just to post the spelling of those suburbs for me in the chat, because I'd be curious to know what they were as well. And then everyone can see what suburbs that you've mentioned there. So next I will take you over to Sydney, to Joe Natoli, which is, I think, pretty sure where all my clients live, to be honest. And so Joe can give us a little update on that market. So when you are ready, Joe, we'll get your update.
Hi everyone, can I just make sure that you can all hear me? I was having some tech issues a little while ago and was really panicking. Awesome, thank you. So I'm Jo Natoli. I'm the principal of the Rental Specialists, and we lease and manage properties across the whole Sydney metropolitan area, as far west as Penrith LGA and as far south as Wollongong. Now, in terms of sales market, let me just give you a quick idea about what you can get sub 800,000. So sub 800,000, you can pick up a 1-bedroom unit in the city for around about, I saw some recently on the market for sale at around about the 650 mark. That will be a 1-bedroom unit. You'll pick up a 1-bedroom unit in Penrith for 485, and that'll actually be brand new. And you'll pick up a 2-bedroom unit in Penrith for about 650. In Arncliffe, you'll pick up a 1-bedroom unit for around about the 550 mark. Now, if you're looking for a house, you do need to go out to the western suburbs, southwest of Sydney as well. You'll be really hard pressed to find anything around the 20, 25 kilometres around the city. It'll be almost impossible to find a house, but you can still pick up some deals in the western suburbs, mainly around the Penrith area and also southwest. But if you're looking in the southwest, make sure you do your research, because there's some great areas and there's some areas that are still developing. Let me put it that way. In terms of the rental market, in terms of my portfolio first, I am seeing some people selling their properties now. Interest rates are starting to hurt a little bit. Cost of living is starting to hurt. So we're a boutique business, so we've actually seen over the last 3 months about 15, 20 of our clients actually put their properties on the market for sale, or offer their properties to family to rent. So they've been actually completely removed from the rental market. Now, in terms of the rental market generally, look, the media is still driving this message that there is a rental crisis. In Sydney, it really is location dependent. We're not seeing the sorts of frenzied demand in the city and around the city. In Surrey Hills, for example, there are heaps of units available for rent. In the eastern suburbs, there's really good supply as well. In the western suburbs, it's a little bit tighter, and we still are seeing competitive demand in the western suburbs. Really, if you're looking to invest in Sydney, make sure you speak to a property manager before you start your purchasing journey, and really drill down into individual locations, because Sydney is not one market. It really is a melting pot of a number of different markets, and what might be happening here in the city could be completely different to what's happening 10 kilometres even just down the road. So make sure you speak to property managers before you jump in and buy anything. Now, in terms of rent increases and lease renewals, our lease renewals, we're getting about a 95% retention rate on our tenancies and our lease renewals, which is absolutely fantastic for our clients. We really do encourage our tenants to sign on fixed term leases. It gives everybody just that little bit more security, which is great. Now, in terms of rent increases, the aggression out of the rent increases has somewhat dissipated compared to the beginning of the year. We're seeing huge increases where properties are becoming vacant, in some cases up to 30%. But for tenants, incumbent tenancies, we're not seeing that huge increase. So we're in those properties that are becoming vacant and coming onto the rental market, they're I guess you could say they're catching up, basically. Days on market for us is 10 days or less, which is fantastic. And to give you an idea of some of the rental deals we've done over the last few months, we've released a studio in Darlinghurst for $500 a week. We leased a 4-bedroom house in Glenmore Park, which is one of those fantastic Western Sydney Penrith suburbs, for $700. In Cranebrook, we leased a 3-bedroom, really basic but really cozy home for $600 a week. In Redfern, we leased a 2-bedroom home for $800 a week. And staying in the western suburbs, in Cambridge Park, we've got a property on the market at the moment that's a granny flat. Some jurisdictions you can't rent out granny flats, but here in Sydney you absolutely can rent out your granny flats to somebody who is actually not a relative of yours. We've got one on the market at the moment for $450 a week, and that's really interesting because 18 months ago it was on the market for $360 a week. So fantastic rental return increases there. And in Coogee, in the eastern suburbs, which is a beautiful part of Sydney, you're looking at around about anywhere between $800 and $900 for a 2-bedroom apartment. And in Surrey Hills, you're looking at for a 2-bedroom unit in a warehouse conversion is around about the $900 a week, and a 1-bedroom is about $680. Really good supply in Surrey Hills as well. So tenants are, you're getting good returns, but that rental frenzy isn't there in Surrey Hills at the moment. But anyway, so that's it from the Sydney market, and feel free to reach out. I'll put my contact details in the chat box if I can help you with anything else.
Wonderful, thanks, Jo. So just waiting for Kelly to come on, and it was just actually a really good reminder that Jo had about speaking to your property manager before you purchase something in any of those areas. So the property manager, the reason why you want to speak to a property manager is that they can also give you a little bit of an insight with regards to what sort of demand there is for tenants. Like, are tenants wanting 3-bedroom homes, 4-bedroom homes, and like Tara had said, that the sheds, for example, we're getting at least $50 extra per week. Like, that's really good information to know. So if you can find out what the ideal tenant is for the suburb you're looking in, it's going to help you buy a property appropriate for that suburb as well. So that's just something that Jo said that I thought I'll just do that reminder. It's super important. Now, Kelly, over to you for Hunter Valley. Because you haven't actually been on here before, just give us a little bit of a brief sort of idea of like also the infrastructure of what's happening as well, and why people are wanting to invest over there.
Can you guys just let me know if you can hear me? Because I just wasn't able to hear Ash just before. Okay, amazing. My name's Kelly and I'm the Director of Hunter Property Management. We service a hour from our doorstep basically, but today I am just going to touch on the Hunter Valley rather than right out to Newcastle because they're kind of two different markets altogether that we service. We have some trends at the moment in respect to vacancies. So we've got about a 1% vacancy rate currently in the Hunter Valley. 4 bedrooms are going on average at $600 per week. Most commonly, they're achieving $650, $670 or $700 depending on the inclusions and where they are. Units are achieving an average of about $530 per week. We're finding that tenants are kind of starting to take their time in the marketplace at the moment. They're taking a week or two to just sit back, have a look what comes up before they're taking action with any applications or anything like that. We've got a lot of new developments in our area at the moment. So there is a high demand for family homes. Though in saying that, we have plenty of them being built, but if you are considering building one, something that really gets the higher rent across the line is ducted air conditioning or any area in the home that allows for like a trailer or a caravan to be parked off street. Those homes are extremely popular, but those features, more so the off-street parking, are a little bit harder to come by. So if you do have a home with that feature, it is really highly regarded. We also have a lack there of 2 to 3 bedroom homes, which is a pocket of the marketplace where a lot of people are looking because obviously it's more affordable. So we could do with a bit more of the smaller sided properties in our area. We have quite good quality of tenants. We've got the mines nearby. So we have a lot of mining families here. They like to stay long term, but we're also seeing families relocating from Sydney so they can have the lifestyle they want for their families here. There are either people who just like to rent long term and relocate, or it's people who want to see if they like the area, just rent while they're settling in, or people who are looking to build and they need to rent during that time. We are seeing a lot of 12-month lease renewals. People like to stay in their homes, and at the moment, most commonly rents are going up about $20 to $40 per renewal. The trending suburbs in our area at the moment, the main one is Huntley, which is located in North Rothbury. This is kind of the first new town in 20 to 25 years in our area. There's a master plan. It consists of 3 villages, a town centre. We have under construction at the moment a restaurant, which is expansion of one of our wineries out here, a McDonald's, a 7-Eleven. We've already got a Coles, KFC and a tavern. There's lots here ranging from 300 square metres for townhouses all the way up to 4,000 square metres. So there's a lot of housing diversity in our area here, which is great because it means there's something for everyone. And we also have a retirement, luxury retirement village in this area as well. Following that, other developments that I would look out for are Cameron Park, which has just had its expansion and completion of its tavern and plaza. Following that, there is another development called the Loxford and the Loxford Waters. They have a proposed super centre with Harvey Norman, Bunnings and the rest of that. And at the moment, yeah, I think I already touched on this, but we're seeing it take about 14 days because tenants are sitting back and just kind of watching the market before they're taking any action. In the new development areas though, most of what we get leases off market because we're able to, if they miss out on something else, put them into something similar in the area, and it just kind of snowballs from there. That's everything from me. I believe I'll be handing over to Melissa Hickson now.
Hey, let me know that you can hear me. Morning, oh, good afternoon, everyone. Cool. Thanks, guys. So my name is Melissa. I am from Melbourne, so the beautiful, beautiful cold state of Melbourne. So at the moment, our rental market is going pretty crazy. So we've seen quite a lot of properties come on the market because of sales. We're finding that there's quite a lot of our clients that obviously with the interest rates have decided to sell their properties. So we are turning over a lot of properties from the sales side. That actually means that there is quite a lot of stock that's available within our local area. However, the stock that's actually available for sale is what I'm actually finding is that it's actually really low quality properties. So the properties that we're getting that are in competition with a lot of the clients that we work with, they're really low quality properties. So it could be like the properties aren't being maintained. The clients then can't afford, the upkeep of the property with compliance, things like that, interest rates, all of that kind of stuff. They're then putting the property on the market for sale. So we're finding that that is happening a lot. There's not a lot of high quality stock that's available. So coming to the vacancy rates, what we're finding is there are quite a few apartments in the inner city that are coming back on market. So the vacancy rate at the moment is sitting around 4 to 5%, so just under 5% for that. However, within the Western Corridor, which is actually where my office is located, so we're about 15 minutes out of the CBD, the vacancy rate at the moment is around just under 1%. So there's not a lot of great stock available, and we're finding that properties are getting turned over within about 7 to 8 days, which is our normal days on market at the moment. In saying that, the application quality as well is pretty average. So we're getting about 30 to 40 applications per property that is coming in. So there's lots of people that are looking for rental properties, but a lot of those applications we need to filter out the great ones from the bad ones. In the inner city, it's still happening a little bit, but not as much. So it's more so that sort of Western Corridor that happens a lot. What we're finding is with relation to lease renewals and rental increases, rents are going up. Obviously, with COVID, we had a lot of our rents that were quite low. That has then since recovered to that sort of a pre-COVID level, and it's obviously with the market at the moment, it's actually increased quite a lot as well. So we're finding that our rents are going up anywhere between $30 to $50 per week as an average rental increase, and majority of our renters are staying on. So we're finding that there's not a lot of drawback with our clients that are moving out. Our renewal rate is sitting at about 92%. So a lot of our clients are staying on. The renewal rate is really high, which is really, really great for our clients as well. We're also finding that I'm getting a lot of people that are contacting us to help them with their investment journey, much like the other guys coming to us before they're looking to purchase a property to see, what the days on market are, what kind of rental return they're looking to get, what the area is like, things like that. There's a lot of new infrastructure that is going on, in particularly around the back of the Truganina area. So there's a new shopping centre that's been, plans have been approved to be developed at the back of that area, which is near the Rockbank, Strathtellar, Melton area. So I'll put that in the chat for you guys as well. But that's the back end of Truganina. So we're finding that area rents out really well. There's a lot of new infrastructure going in there. Families are looking to rent there, which is great. Easy access to freeway, things like that too. So that is a really hot spot for people that are looking for capital growth within their portfolio sizes, within their portfolio. An average rent out there maybe for a 4-bedroom, 2-bathroom, 2-car park property, anywhere between the 475 to 500 is pretty average. For a really high-end property in that area, you're looking at $500 plus. 12 months ago, that would have been sitting at around 430 to 450. So rent's definitely going up at the moment. It's a great time to be an investor in Melbourne because, to be honest, there's not a lot of great stock that's available. So if you have a really great property that's in a great area, new infrastructure area and things like that, they do rent out really, really, really easily. So I'll put my details in the chat. I'll hand it back over to Ash. Let me know if you have any questions, and thanks for listening, guys.
Hi, I'm Kylie Walker. I am the owner of I Think Property, and we specialise in real estate in southeast Queensland. We currently have offices based in Ipswich and Toowoomba, and the market hasn't really changed that much since the last update, with both the sales and rental markets still fairly steady. Toowoomba is probably the strongest performing area for investors right now. Tenant demand is huge, with vacancies under 1%, and we've only got 2 properties currently available in Toowoomba. There isn't that much stock around, but we are experiencing an increase in our break leases, with lots of people moving jobs and moving out of the area. But the good news is there's also lots of people moving into the area as well. And rental prices are actually increasing around 10% at the moment. A 2-bedroom, 2-bathroom unit is going for around $460 per week, and houses 3 and 4 bedroom are going around $550 to $600. There is really nothing available for rent under $450 per week at the moment. When it comes to lease renewals, we're also experiencing an 8 to 10% increase in rental prices there as well. And 98% of our tenants are actually staying put in their properties because of that, obviously that lack of stock out there. There's 15 to 20 people are showing up per viewing at properties when we are advertising, and we're getting around 3 to 6 applications. Interestingly, we are seeing a lot of multiple families or 2 couples moving in together, and I think this is largely because of the rental affordability, and with 2 couples living in there or multiple families living in properties, it is much easier to be able to afford that rent. When it comes to sales in Toowoomba, they are steady and prices are still increasing. A lot of stock is selling due to the interest rates increasing, especially our rent roll and investor stock. Investors are actually falling over themselves at the moment trying to get investors in Toowoomba. We've got a lot of buyers currently around. 6% yields are achievable. So if you're looking to buy in the low 500s, which is really difficult at the moment, but if you can get one in the low 500s, that'll be great buying, and you'll likely achieve rent around the 600 mark. If you want to get a better property, you're looking at around the $700K with $800 per week rent being achieved. And because it's really hard to get a builder in Toowoomba at the moment, and in fact, probably across Australia, it's really hard to get builders at the moment. A lot of second-hand stock is being sold and is really popular at the moment. When it comes to Ipswich, the demand is still there. The only issue with Ipswich is sometimes it's hard to get quality applicants, and it can be a challenge, or the affordability is actually very challenging at the moment. The rental market has slowed a bit. We aren't getting as many people through, and we're not renting as quickly as we were sort of 3 to 4 months ago. On average, we're getting around 15 to 20 people per viewing with around 3 to 5 applications. The applications, like I said, can be a bit hit and miss, and affordability is increasingly becoming an issue. But rental prices are staying stable. There's not much of an increase. When it comes to lease renewals, we're only increasing that $10 to $20. Previously, we were increasing it to $50 or more per week. So rents for a 4-bedroom property range between that $450 to $500 per week. When it comes to new development properties, though, we are experiencing a bit of a lull there, and anything over 500 plus is hard to achieve and is sitting vacant for longer than expected. So average days on market have increased. We were previously at less than a week. We're now up to 3 weeks for some properties, especially if the investors aren't willing to reduce the rent to meet that demand at the time. When it comes to sales, it's a very strong sales market at the moment. We just sold a duplex. And in fact, the flavour of the month for buyers in the Ipswich region is dual occupancy or duplexes. And they're selling for around $600K with rental returns around that $750 per week. In fact, we just sold a duplex to an investor who paid $350K 3 years ago. It just sold for $600K this week, and it was a multiple buying situation. Savvy investors are really capitalizing on the capital growth that they've achieved and are selling now before interest rates go up much higher. So there's plenty of buying options coming to the market as long as you can sit on them and wait for that capital growth to be achieved. If you want to learn more about Ipswich or Toowoomba and whether or not they're the right investment locations for you, or you have a property in the region and you want to see if it's performing as well as it could be, I'm happy to have a chat further with you. You can find me on social media at That Property Mum or via my website, ithinkproperty.com.au. Thank you so much for your time.
Thanks, Kylie. Interesting she spoke about dual occupancy because that's something that's not overly popular over in Perth, but some of the people I've been speaking to this week, and when I mentioned those real northern suburbs like Yanchep and Alkimos, dual occupancy had come up with one of these homes having a rent return of $1,050 a week for the combined rental value, which is massive. I don't know how much the sale price would have been, but I can't imagine it being more than 600 or 700,000. So I think we'll see a bit more of that dual occupancy over here as well. So my tip of the quarter, I was going to say the week, but it's going to be the quarter for you. We recently, a few weeks ago, had a tenant pass away, and tenants dying in properties is very, very common. It's more common than what you actually know. And so in the last two situations where this has happened in the last 12 months, both landlords, one landlord didn't have landlord insurance, the second one did, but it was an inadequate landlord policy that didn't cover death of a tenant. So that landlord, in obviously a very sensitive situation, is going to be out of pocket as well. And so it's just a friendly reminder that when you go to do your landlord insurance and looking into it or getting it, please make sure it's a proper specialist policy. So I can't give recommendations on who you should use, but a couple of options that specialise in landlord insurance are EBM, Property Insurance Plus, and Terry Shear. So they're specialists, or an example of specialist landlord insurance policies that you should look at and compare your policies against. Because, for example, like I'm familiar with the Property Insurance Plus, you're looking at about, in WA, because it's different premiums in different states, it's about $351 per year. So it's not an expensive policy to have, but they would have covered our landlord for up to 26 weeks of loss of rent due to death, which is really a very, very good policy to have, where the client read the fine print in their generic insurance company's policy and it didn't cover it. So I just want to remind people to please make sure that you get a proper specialist landlord insurance policy, because you think these things don't happen to you, but it's honestly, it's more common than what you would know, but it's just not something talked about either, because we don't talk about, you know, people passing away. So that is my little tip. Please check that property, whether you've got existing properties or new properties. So thank you to all the property managers that have joined in today. I was very excited to sort of hear a little bit more of the regional areas personally. And if there are any areas around Australia that aren't covered that you're maybe interested in, please reach out, because whether you reach out to me or anyone that's on here, we will have some connections for you. And if there is an area that is a little bit of a hot spot, I will make sure that I cover that in the next quarterly investor webinar as well, so that we are helping you as much as possible. So thank you. Go on and enjoy your day. I hope this time was a better time instead of the evening. I know that it suits all of us a lot better. The replay will come to you very quickly after, I think within an hour. You'll get that replay to share as well if you need to. And I look forward to giving you another update at the end of January. Any questions, please just let us know, and we will all be able to help you.